If you're one of the small but real number of people still receiving your Social Security payment by paper check in the mail, Social Security itself confirmed in an official announcement published this month that it intends to complete a full transition to electronic-only payments before the end of this year. This isn't a proposal or a distant possibility. It's already substantially underway. It's based on a federal law and an executive order that took effect nearly a year ago, and the agency is now actively working through the final group of beneficiaries still receiving mailed checks. Here's exactly what's happening, why paper checks are being phased out specifically, who still qualifies for an exception, and exactly what to do if this affects you. The actual timeline. Here's the sequence of events, laid out clearly, because understanding the timeline explains why this is urgent right now, rather than something to think about eventually. In March of 2025, an executive order titled Modernizing Payments to and from America's Bank Account directed federal agencies, including the Social Security Administration, to stop issuing paper checks for federal disbursements. The compliance deadline set by that order was September 30th, 2025, a date that has already passed. Since that date, federal law has technically required Social Security benefits to be paid electronically. But according to Social Security's own June 2026 announcement, that requirement, while technically in effect, had not yet been fully enforced against the remaining group of paper check recipients. That changed with a follow-up announcement. Social Security confirmed it is now in the final phase of completing this transition, with a stated goal of finishing before the end of 2026. To put the scale of this in perspective, as of September 2025, roughly 390,000 Social Security beneficiaries were still receiving paper checks, representing a little over half of 1% of the total beneficiary population. That's a genuinely small group in percentage terms, but it's still hundreds of thousands of actual people. And if you're one of them, the percentage doesn't matter nearly as much as your own specific situation does. Why the government is doing this? It's worth understanding the stated reasoning, because it explains why this shift is happening now rather than being purely arbitrary. According to Social Security's own published statement, a paper check is 16 times more likely to be lost, stolen, altered, or returned as undeliverable compared to an electronic payment. Beyond the security concern, there's also a real cost difference. The Treasury Department has stated that issuing a paper check costs roughly 50 cents, compared to less than 15 cents for an electronic transfer. Across tens of millions of monthly payments, that difference adds up to a meaningful amount of savings for the federal government, cited in some reporting as over $1.6 million annually from this specific change alone. Whatever your view of the policy rationale, the practical reality is the same either way. Paper checks are being actively phased out, and the remaining recipients are the specific focus of the agency's current outreach efforts. Who still qualifies for an exception? Here's the part that matters most if you're genuinely unable to transition to electronic payments, because real exceptions do exist, and it's worth knowing exactly how they work rather than assuming you have no options. The Social Security Administration has stated it will allow exceptions for beneficiaries who can demonstrate a documented obstacle to receiving electronic payments. Mentioned examples include certain mental health conditions or living in a genuinely remote area without reasonable access to a financial institution. There's also a specific, narrower exception tied to age. Some reporting on this transition has identified beneficiaries born before May 1st, 1921, who were already receiving payment by paper check as of a specific earlier date, as a category that may continue to qualify under a legacy exception, separate from the general hardship waiver process. If you believe you have a genuine documented reason you can't transition to electronic payment, the exception isn't automatic. You need to actively request a waiver through the U.S. Treasury, not through Social Security directly. The number to call for this specific waiver request is 1-877-874-6347. Social Security has stated its own technicians are available to help beneficiaries navigate this transition and answer questions. So contacting Social Security directly is also a reasonable starting point if you're unsure which office or process applies to your specific situation. One additional change worth knowing: the agency has also eliminated what used to be called a temporary check option that was previously available while someone's electronic payment method was being set up during a new claim. New applicants are now required to select an electronic payment method as part of their initial application, without that temporary paper bridge option that used to exist. Your two electronic options. If you don't have a specific reason to seek an exception, here are the two paths Social Security is directing people toward, and it's worth understanding both, since one fits a meaningfully different situation than the other. Direct deposit sends your payment straight into a checking or savings account at a bank or credit union. This is generally the fastest and most straightforward option if you already have or can open a bank account. Setting this up involves either logging into your My Social Security account at ssa.gov and entering your bank's routing and account numbers directly, or asking your bank to transmit that information to Social Security electronically on your behalf. The Direct Express card is a prepaid debit card specifically designed for beneficiaries who don't have or don't want a traditional bank account. Your payment loads directly onto the card each month, and it functions like a standard debit card for purchases, bill payments, and ATM withdrawals. This option exists specifically because the Treasury Department recognizes that a meaningful number of Americans, cited estimates put unbanked households at roughly 4.2%, or about 5.6 million households nationally, don't have access to traditional banking, and the transition was designed with that reality in mind, rather than assuming everyone already has a bank account. What to actually do this week? Here's exactly how to move through this, step by step, depending on your situation. First, if you're not sure whether you're still receiving a paper check versus already being set up electronically, check your most recent Social Security correspondence, or log into your My Social Security account, which will show your current payment method directly. Second, if you are still on paper checks and don't have a specific hardship reason to remain on them, choose between direct deposit and the Direct Express card, based on whether you currently have or want a bank account, and set it up through your My Social Security account, by phone, or by visiting a local Social Security office in person if you're not comfortable navigating this online alone. Third, if you genuinely have a documented obstacle to going electronic, a specific health condition, a lack of reasonable access to banking in your area, call the Treasury's waiver line directly at 1-877-8746-347 and be prepared to explain your specific circumstances, since this exception process exists precisely for situations like yours. Don't wait for a check to simply stop arriving before addressing this. Making this change proactively on your own timeline is considerably less stressful than discovering a missing payment and scrambling to fix it after the fact. This transition is real, it's already substantially in motion, and it's specifically targeting the remaining group of beneficiaries still on paper checks before the end of this year. If that's you, or a parent, spouse, or neighbor you know is still receiving a mailed check, this is worth addressing directly this week rather than waiting to see what happens. The agency has been clear that its goal is full completion of this transition before 2026 ends.